How did long-term care insurance, promised as peace of mind for aging adults, become a source of frustration?
I've never heard anybody say, I cannot wait to retire to fight insurance companies.
Soaring costs for families.
These are not just numbers on their balance sheet, these are actual human beings.
And an industry in crisis.
No one should have to deal with these struggles.
It's a reality that now has many Minnesotans simply wondering, who benefits?
I want to grow old gracefully.
With dignity. All good intentions, but help make them a reality with long-term care insurance from GE.
In the 1990s, long-term care insurance was a booming business. They were sold as a way for people to plan for the future, covering the cost for an aging adult who might one day be placed in a nursing home, or offsetting bills for long-term care for people with disabling diseases. One of those long-term care insurance companies is Continental Casualty Company, also known as CNA. It sold policies to Minnesotans, who at one point paid more than $32 million in premiums. That's more than any other state in the country. The policies were often sold as part of a benefits package to state, county, and city workers, including to some of the state's largest employers, including Mayo Clinic, 3M, and Wells Fargo. These are some of CNA's own marketing materials, where it promised affordable and stable premiums.
On a sense of a consumer, it is a great policy. On a business line, they were silly to write these things.
But decades later, the long-term care industry is now in crisis. A couple reasons why. Life expectancy has gone up, and so has the cost of care.
They underestimated the number of people who are going to hang on to these policies.
Financial records reviewed by the Fox 9 investigators reveal CNA has repeatedly raised rates on customers in recent years, offered policy buyouts at a fraction of their worth, and pressured people to walk away from their insurance policies they paid into for decades.
I think we all know what right and wrong is.
John's parents bought their long-term care insurance from CNA in 2004. And while they had to fight the insurance company on his dad's claim, his mom's premiums started going up.
It seems like pressuring old people to stop paying the premiums for things that they've been hoping they'd be able to use at this point in time.
He's not wrong. Listen to this.
Our rate increase programs are ongoing.
Listen to how the company laid out their plans in a call with investors.
We were fairly successful this year in achieving rate increases, and we expect that to continue going forward.
In Minnesota, CNA wanted to increase rates by 345% over the last 9 years. While the state rejected that request, it allowed CNA to increase rates up to 97% over the same time frame. We went to the state agency that approved those rate hikes to ask them how they justify those increases to consumers.
There is, I think, a necessary balance between consumer protection and preventing too much financial distress for the insurers.
I also asked the state about companies propping up their business with rate hikes.
I'm not too happy about that.
As for CNA, they did not respond to our interview requests, but in presentations with its own investors, the company repeatedly highlighted the success they've had in raising rates.
Way to go. That's fantastic for you. Meanwhile, my mom's trying to decide if she wants to continue with her premium or not because the premiums got more expensive. She's scared not to go with her premium because she's afraid that if she ends up in a long-term care situation, she won't be able to afford it. And that's why 20 years ago they bought into this policy.
But CNA is now facing a class action lawsuit, claiming the company has, quote, schemed to maximize profits and recoup losses at their expense, and that its practices are both deceptive and underhanded.
Yeah, that's not great. That's not a great feeling, knowing that they are doing this intentionally.
Betsy is a mother to 3 young children and part of that lawsuit.
I have an arthritis disease.
She purchased her long-term care insurance years ago to avoid becoming a financial burden later in life.
Really, because again, I had chronic health conditions, was making sure that, especially if it happened even in the next 30 years, that my family, my children, and my husband would be protected from those potential costs.
But her payments have gone up repeatedly, and she's received offers from CNA to reduce her benefits and even buy out the policy altogether.
I did receive 2 of those. They were for around $28,000, and that's a big amount of money as a young family. That's really tempting just to take that.
Those are all examples of CNA's methods that have contributed to policyholders either reducing their coverage or walking away from their policies completely.
It seems as though their default is to try to get out of it.
To recap, CNA had an excellent quarter.
That's CNA's former CEO on an investor call in 2023, celebrating their ability to offload long-term care insurance policies.
Policy counts are down more than 40% since the block was closed to new participants.
That same year, his total compensation jumped 7 figures, topping $16 million.
I think it just reflects poorly in the entire insurance industry.
Maybe I should just have bought CNA stock and not my long-term care insurance plan. Because if I was a shareholder, this is fabulous.
But the problems with long-term care insurance don't end there. What happens when people try to cash in on their insurance and make a claim? That's the next part of the story that we're currently working on, and it involves a pattern of delays and denials. For the Fox 9 Investigators, I'm Nathan O'Neal.